Good afternoon, all. CamelbackTrading.org coming to you this Wednesday afternoon, January 6th. We're looking at the SPY ETF market profile here on Window Trader. And an absolute wild day, an unfortunate day once again in our country as civil unrest keeps happening. I never do this, but I just have to say that I don't care what side of the aisle you're on. Unless people start realizing that neither side gives a rat's ass about you, this country's in for a very, very difficult time. The people fight each other like sports teams fans fight each other while the teams go out for a beer and Republicans and Democratic congressmen and senators go out for beers. They don't give a crap about anybody. Get that through your head. If the people ever came together and threw all of them out, maybe, just maybe, we can get this country going in the right direction again. It obviously had an effect on the market later in the day. We do hold a trend day in the SPY. I'm going to start with the other ones. Russell, at one point, had 7 sets of single prints. 7. They end up holding 1, just like we did in B. We only had 4. They had 7 at one point as they one time framed up until J period became a reversal bar. And then all this unrest started in D.C. Now, even before that started, I was telling the room, the market was getting, well, I'll show you on SPY what I was talking about. But all-time high gap holds here for the Russell set of single prints. Triple Qs. What an ugly day. And remember, we had an inside day in all of these. So Russell came out to the upside and held it. Triple Qs actually gapped lower out of an inside day, only to take it all back and almost get yesterday's high and fail and then close close to the lows. They end 8 wide. They have a bit of a mess up here the last couple of days. F&I's high, K&M's high from yesterday. I thought for sure they had a chance of popping some stops at these levels. Never happened, obviously. And then for us, we opened, started ripping, one-time framing up, taking out everything in sight. But the market we got a little tied here. Two-sided trade, 5 wide. They popped again, but two-sided trade, no single prints. I told the room, if we don't get another set of single prints at some point to get pushed higher, this market, the week longs up here, are going to give it up. And they did. I had a small put. I got caught looking at the 144 when it flushed. I only had a small put. I told the room I wanted to add. I never did. Made really nice on the small lot that I had, but never added. And then when things were coming out of DC, they just continued now pushing. The week longs getting out and shorts pushing down. But for now, they defended today's halfback pretty good and held 1 set of single prints. As far as my trades, wow, what a day. So A period started. I said B's range. Here's my go, no go line. So when A pushed up, I actually started a small short, probably earlier than I should have, and then added right around B's high. So I had 40 puts and I was getting hurt. When B period, I said when B period opened, didn't take out A's high right away, but didn't come in, I said, this is wrong. So I took off those 40 puts. I took off the 40 puts, and then I got the opportunity when B hung around a little longer. I bought, and again, I traded. So the first trade I took was for Friday's expiration, the 372 puts. And I was down pretty decent, even though it was only 40 lots. I bought 250 calls of the 371 calls, today's expiration. And it finally exploded to the upside for me and had a really nice trade. Now, I didn't hold it. I told the room, shame on me. I should have held some of them. But what I was down, got that back and a lot more on that call play. Then, I didn't do anything I finally got out of them. I didn't do anything in C or D. E came down. I'm like, well, look. I'm not playing innovator and shorting it. I'm actually going to do the opposite. We have 2 sets of single prints. I actually bought another 125 calls of the 374 calls and rode it back up around between C's high and D's high. That worked out very nice. I period, I took my first short. I'm sorry, since A period. I was like, well, we're getting two-sided trade. We have a poor high. I'm like, I'm just going to start a small one. I want to see if we take out the day's high. If we don't get acceleration, I'll add. If we do get acceleration, I get out. I took a 10 lot, added another 10 lot. When it came in, took off those 10. So when J opened, I still had the 10, but I added small when we went up, took it off. But I really want to add at least 40 or 50 when we took out H and I's low. But again, I told you I missed it. It happened, started flushing. I just rode the 10 down, took them off basically at J's low for a nice trade. Actually, wait a second. Did I take them off at J's low or in K? No, it was at J's low. Yeah. And then after that, I told the room, for the most part, everybody kept asking, do I want to get long? I said I would look for a long around half back, but as that news was coming out, as bad as things were looking in D.C., I'm like, these algos are agitated. I'm like, so I don't know if I want to do that. But what I did do in K, L, and M, I only took the one long. I did take a long in K, basically around the low. It was a small one. But then after that, in K, L, and M, every push up, I started scalping shorts. And I'm telling you, I was only doing fives. Fives, the most I did at one point was a 10 lot. Because as it pushed up, I took a 5 lot, came in 30, 40 cents. I mean, they were paying me beautifully. And the reason, look, could you make money on both sides? Yeah, but technically the right trade at that point with the one-time framing, and because of the unrest, I thought if anything we had a better chance of filling singles and going lower than certainly going up and making a new high on the day. So that's why I thought the K was the proper, the short was the proper play. So I kept doing that. Not a lot of times I did it, but I did it in K, L, and I did it even in M period, and ended up with a very, very nice day. Okay, destinations. And I'm telling you, this volatility, right? Low volatility begets high volatility, and that's what we're getting into now. Remember, last month's range was small. Last week's range was small. We'll go over those in a minute. So, destinations for tomorrow. We're going to have another party tomorrow because these destinations are far and wide. We only have one destination on the upside. That is today's high of 376.98. The all-time high, and it's also a poor high for both us and the ES. Downside. So they have us closing right now at, let's see where they have us closing, 373.55. So my first upside destination is $3.50 away until we get more market-generated information. First downside of the single prints. They start at 372.82. M's low and get filled at 372.35. A's high. Then below that, we don't have anything to today's low, 369.12. That's $3 away. Below that, we don't have anything to 368.05. It's another $1. Then we don't have anything to 364.82. Daily low. And then we don't have anything to the monthly low of 362.03. So I had a lot of questions. Is this long-term money buying today? Well, the volume was pretty good this morning. We did stop at some visual points. A period stopped at yesterday's high, which gave me a beautiful opportunity to get out of that short and get long as we came out of an inside day and exploded to the upside. That's visual. That's short-term traders. Long-term traders don't care about that. Were they in here this morning? I'm sure they were, especially when we made a new all-time high and we were running pretty good with good tempo, good volume early. But again, I think the majority of the play is still being run by short-term players and day traders like ourselves. Even this on the downside. Do you think long-term players give a rat's ass about these single prints in B or half back? I told the room, if this was Putnam, if this was Fidelity, if these were hedge funds that were like, whoa, get me out, you think we're going to stop here? Of course not. So all this were the weak longs getting out and shorts pushing down. Now, can that change? Of course it can. If there's some real unrest in the country tonight, of course it could change. But let's face facts. When there was unrest back in the summer, the market did nothing. They didn't care. The market just kept grinding up. The market doesn't care about anything except the Fed. So the news doesn't make the market. The market makes the news. It's certainly a catalyst maybe for them to keep pushing. But if this civil unrest was that newsworthy to the market, do you think we would have closed up here? Not for my money's worth, but we'll see. Let's go to the charts. Monthly. One-time framing up out of an inside month for 3 months. Still healthy. Until we take out last month's low. Again, this market's healthy. Now, last month's high was 374.66. We did close inside of it. Is that something to worry about? Not yet. Not yet. But for me, the big thing is last month's low. 362.03. That's the thing we got to keep an eye on. Okay? Weekly. Because if we take that out, again, could have an outside month down at some point. Possibly. Now let's look at the weekly. Before the monthly does anything, this is the big one. We said earlier in the week, after Monday, everybody was yelling outside week down. Well, guess what? Until that flush out late in the day, we had an outside week up, didn't we? But we don't. We don't have crap. We don't have anything until Friday's close. So like I told my room, and this is what you get for $20, by the way, although it's going to 30 starting February 1st. Here's what's important to me. By Friday's close, if we close inside of last week's range, then all we are is in balance. And the balance is this week's range. However, if Friday night we close below last week's low, we did have an outside week down, and now we have to start thinking, what's going on? Where's our next destinations to the downside? Next one for me would be last month's low and then 359.17, the bottom of this 4-week balance. On the flip side, if we close Friday night above last week's high, well, then we're obviously looking at new all-time highs, or attempting to. So we're not going to know until Friday's close what transpires here, right? And then on the daily, we came out of an inside day to the upside. We had a great trade if you took it. For now, we're in a 3-day balance. Today's high, all-time high, is the top of the balance. Monday's low is the bottom of the balance. So just like we can't do anything in the monthly to the weekly, well, we can't do anything in the weekly to the daily starts. Well, so for my money's worth, if we take out Monday's low, there's a good chance we're going to go and get last month's low. And then the danger starts. That's a key thing for this 3-day balance. On the flip side, if we come out of it to the upside, it's new all-time highs. 100 million shares so far, so pretty good volume. We did 110 million Monday. We did 66 yesterday, inside day. That's not a surprise. And then today, right now, we're at 100 million with the after hours, so we're probably going to do about the same as Monday. Is that good volume? Yes. Is it tremendous volume? No. You saw the volume we did in February and March. So it remains to be seen. We're still up in the longest time frame. We're in balance in the weekly and daily. We had a really good day in the trading room today. We kept a lot of people out of trouble again on both sides. Awesome traders in there. Come check us out. Like I said, starting February 1st, the price is going up. Have a great evening. I hope you had a great day. And we'll speak prior to the opening tomorrow.